Good afternoon, everybody. Welcome to this final teaching session, which is going to handle budgets and cash flows. So this section is important for your business plan, as you'll have to include a budget and a cash flow in there. But then it's also important for life, because when you are now going to start your own business, or want to start your own business, then you'll have to go and sit and see what your monthly expenses are and what you think you can get in, and whether those two are going to match, whether you will make enough profit to be able to cover your salary. But then also you're going to have to look at cash flow, because your cash flows might differ from your profits, as you need to take out some cash to buy PCs and cars and set up your business and all of those type of things. So we'll have a look at all of that in this session. So let me share our PowerPoint. There's not too much in there, just some of the very basics. Okay, so let's look at our budget. What is the purpose of our budget? The purpose is to determine whether your firm will make a profit, how much you can draw monthly. Okay, so that is simply taking all of your income and expenses into an account. So it does not take into account where you generate assets or purchase assets or incur liabilities. So in the previous session, we did our income statement and balance sheet. So all of the lines included on our income statement is included in the budget. So to know whether something should be included in your budget or not, you have to ask yourself the question, does it affect my equity? Have I either gained value or lost value because of this transaction? Has my firm gained or lost value if this transaction incurred, or if this transaction finds place? And then we've got a cash flow forecast. So what the purpose is of your cash flow forecast is to determine initial funds that you need to put into the business. So to see how much money do you need in your savings to be able to start your business, to buy everything that you need to set up your new firm. And if you don't have any funds, then you'll have to look at financing, for example, a bank overdraft. And doing this exercise will give you an idea of how much funds you'll need to start up your business, and also to maintain, because you will probably run at a loss for the first few months until the money starts flowing in. So basically, how much cash will you need, as in hard monies in the bank. So our question that we ask, if I can skip to 3, well, at 2 it says, all that is included in my cash flow forecast are transactions that reflect on the bank statement. So if you remember, when we did ledgers, we asked ourselves, firstly, is it trust or business? Now we don't have a trust budget. So the moment you answer trust, then it doesn't go into your cash flow forecast. But if you then answered business, the next question was, is there a flow of cash or not? Now, the moment you answer yes to that question, then that item must be included in your cash flow forecast. So our question is, will this transaction show on my bank statement in future? So obviously, our budget and our cash flow forecast will be a future prediction of what we think the funds are that will come in, and what expenses we'll incur, what assets we have to purchase, and what liabilities we have to pay. So let's have a look at the format of a budget. Now, as I said, the budget includes all of your income and expenses. So basically what happens is it looks exactly the same as our income statement that we did in the previous lecture. The only difference is now, where in the income statement, we only showed our current month, which has passed. We are now showing the months following, the months of the future, for 2, 3, 4, 12 months or 2 years, or for however long you want to run your budget. So we've now got an income statement. So let's say our current month is November. There now we are projecting December, Jan, Feb, how we think the numbers are going to look. Then you'll see we have a profit and a loss at the end of each month, but then we've also got an accumulated profit or loss to see whether we are going to, at the end, make a profit or whether we are going to make a loss. And then let's have a look at the format of the cash flow forecast. So this looks slightly different. So with a cash flow forecast, we've simply got positive cash flows. And under positive cash flows, we are looking at our debtors. So in the budget, we can see fees that we write. But this just basically says how much have we invoiced. That doesn't tell us how the guys are going to pay. So in my cash flow forecast, I will now reflect how I think the clients are going to pay those fees that have been generated. And then also, if we have loans from the shareholder, that will be included in the cash flow, because the answer is that funds will reflect on my bank statement. So this is basically what I think my bank statement will look like for the next 4 months. Then under negative cash flows, I've got all of my normal business expenses. But if I have any capital expenditure, like buying a motor vehicle or buying computers or anything like that, that will also be included under negative cash flows, because it is a transaction that will in future reflect on my bank statement. And then I've got 3 lines at the bottom: movement, opening balance, and closing balance. So the movement basically tells me for each particular month, what will I have gained cash in my bank, or will I have lost cash in my bank? Now, assuming this is the first month we trade, I start my bank balance on 0. Then my closing balance will be my movement for that month. Now in December, I'm projecting a 25,000 Rand inflow of cash, which means after I've taken my negative month the month before, I should have 6,700 Rand. And then we go on like that. Then there I've made almost 5,000. So I carry that forward and I should have about 11,500 Rand in the bank. And then for February, I estimate I'm going to make almost 7,000 Rand. And if I take my opening balance, it gives me a closing balance. So what this is showing to us is, even though in my income statement or in my budget, I've been profitable, this is now telling me for me to set up and start up my firm, I need to have an overdraft of at least 20,000 Rand, and I need 30,000 Rand in cash that I can put into the business to be able to start up this business. So I need almost 50,000 Rand, or access to 50,000 Rand, to be able to start up this business. So again, we're going to do a teaching example. So for every line item in the teaching example, we've basically got one of 4 options that we can do. Either we are only going to reflect that line item or the question in the budget, or we are only going to show it in the cash flow. We could have items that give us info about both, so that one line gets inserted into your budget and your cash flow. And in line 4, we've got an option to say not at all. It might be info about things that could happen in future or has happened, but there's no transaction to be accounted for. So that's our 4 options. Is it budget only, cash flow only, both, or none? Okay, so the best way to do this will be to run through a little exercise. Okay, so here's our little teaching exercise for the afternoon. Right, so we start up a new firm in November 2019, and we are going to do a budget for the 4 months ending February 2020. So we're starting our business. We are now on the 1st of November, and we're going to do a budget and a cash flow forecast. So here you'll see there's that exact format that we had. I just want to pull this formula through there. So we'll have the exact same format as in the PowerPoint slides. So basically we're going to take each line, analyze it, and see where to slot it into this little template. So let's start off. It says fees for the 4 months will start at 20,000 Rand in November and increase by 10% per month from there on. So now you've got to ask yourself the question, is this telling me something about budget, about the cash flow? Could it affect both, or could it affect none of them? So let's first start. Does it affect my budget? So let's see. If I tell you fees that we've generated, will that affect my equity value? Will my value increase because I generate fees? And the answer is yes. In our income statement that we did in the previous lecture, we showed professional fees as our income. So let's go and put that one in there immediately. So it says it will start at 20,000 Rand in November. So we know our fees for November will be 20,000 Rand, like that. And then it will increase by 10% per month from there on. So every month will be 10% more. So the formula is we take the month before and we can say times 1.1. Next one is December times 1.1. February equals that times 1.1. Yeah, so that is fees for the first line. And we put that in our budget. Now we've got to ask ourselves, does this give us any info about our cash flow forecast? Can we determine at this point with that amount of info how these guys that I fee here are going to physically pay the funds? And the answer is no. We don't know how they're going to pay. So line number 1 will only reflect in the budget. We don't have enough info to handle cash flow for that. But if we then move to line item number 2, it says debtors are expected to pay 60% in the month after a fee is raised and 40% within 60 days. So now let's ask ourselves, should that go in the budget, the cash flow, both or none? So let's first look at the budget. Can I now go and under income say debtor receipts and say 60% of that? The answer is no. Now I am increasing or inflating my income, because what question 2 is telling us is it's telling us how these fees that we've raised will be paid into my bank. So I can't go and duplicate the fees. So that means under our cash flow forecast, under positive cash flows, we were going to have 30-day debtors and 60-day debtors. So let's first handle the 30-day debtors. 30-day debtors will pay 60% in the month after a fee is raised. So that means if I raise a fee in November for 20,000 Rand, then my 30-day debtor will pay 60% of that in December. The fees that I raised in December, 60% of that will come in Jan. And the fees that I raised in Jan, of that, 60% will come in Feb. What about the Feb fees that I have there? So yes, that will come in March, but we are not required to do a cash flow forecast or a budget for March. So the Feb fees will simply leave out for this exercise. Then if we look at question 2, it says 40% will be received within 60 days. So that means my fee that I raised in November, 60% will come in December, and the remaining 40% will come in January. Because I raised the fee there, in December we receive 60%, and in January the remaining 40%. So my fees that I raise in December will receive 60% in Jan and the remaining 40% in Feb. So let's just see if I tally up. So if I take those two there, that tallies my fees. So November will be received in December and Jan. December will be received in Jan and Feb. And of the Jan fees, we're only covering a portion of Feb, and the other one would have been in March, but we don't care about that. Okay, so are you guys hopefully getting the feeling for when something goes into the budget and when something is supposed to go into the cash flow? So let's have a look at number 3. Bank charges of 300 Rand was incurred in November and increased inflationary per month. So it increased by 6% per month. So let's first start. Ask yourself the question, does this tell me something about my budget, my cash flow, both, or none? So let's first look at the budget. Does it tell me something about my budget? Once I pay my bank charges, will I lose that amount of equity? Will the bank ever give that money back to me? The answer is no. Once my bank charge goes off my system, the money is gone. So therefore, it's definitely an expense. So I'm going to say bank charges. It says that it starts at 300 Rand and it increases by 6%. So in November, my bank charge will be 300 Rand. There it will be 300 Rand times 1.06. January it will be December times 1.06. February it will be January times 1.06. Okay. So now we have to ask ourselves, can I also extract information for the cash flow from that info? So let's think about that. When my bank charge goes off on my bank statement, or when I incur my bank charge expense, does that reflect on my bank statement? And the answer is yes. So there's no timing difference between when I receive the invoice for my bank charges or when it goes off my bank. So I can, under negative cash flows, include bank charges, and I'm literally going to say copy and paste, because my expense and my cash outflow looks exactly the same. Now let's move on to line number 4. It says printing and stationery which was purchased on account at 400 Rand per month. So let's first think, is that budget, cash flow, both, or none? So if printing and stationery is purchased on account at 400 Rand per month, then is that an expense? If I purchase my stationery and printing and paper and I print on it, will someone give me that money back, or will I be able to sell that off again in future after I've used the pens and the pencils and paper? And the answer is no. So printing and stationery, we definitely know is a expense item. And I said it's simply 400 Rand every month. I then also specifically said that this printing and stationery was purchased on account at 400 Rand per month. So do I know when the cash is going to flow? Do I at this stage know when I'm going to settle that account? And the answer is no. There's not enough info in that line for me to determine when I'm going to settle that stationery account. So in that case, we can't determine the cash flow, so that line will only reflect in my budget. But if we then read the very next line, all creditor accounts stationery are settled in 30 days. So now it's telling me that my purchase or my expense that I incurred in November will be paid in December. So I'm going to say negative cash flow, my stationery supplier. In November, I will have no cash outflow because I only incurred the expense in November. So then I'm going to say in December, I pay my November charge. In Jan, I'm going to pay my December one, and in Feb, I'm going to pay Jan. When I'm going to pay Feb in March, but it's not required. Okay, so then we get to our old friend, rent deposit and monthly rent. So let's first look at the rental deposit. Is the rental deposit a budget item, cash flow item, both or none? So let's first look at the budget. If I pay a rental deposit, will my landlord give that back to me, or is the money lost? So at this point, we believe that we will get it back. So my equity hasn't actually changed. So rental deposit does not go into my budget because it's not an expense. I will in future get that money back. But when I pay my rental deposit, will that transaction reflect in my bank statement? And the answer is yes, it will definitely reflect in my bank statement. So the moment something will reflect on my bank statement, I need to include it in my cash flow forecast. So under negative cash flows, I'm going to say rent deposit. And in which month? Okay, it says you pay a once-off rental deposit and then monthly rent. So let's just assume that's in November. So the rental deposit is a once-off. So only in my November column will I show a negative outflow of 3,000 Rand. I'm not going to pay that in December, Jan, Feb, and one day in a year or two from now, when the landlord repays my rental deposit, I will show that under positive cash flows, but still not in the budget. And then what about our rental expense? Our rent expense is 3,000 Rand a month. Does that go into my budget? Is that an expense item? After I pay the rent, will the landlord give it back to me after I've used the office? And the answer is definitely no. So rental expense goes into my budget at an amount of 3,000 Rand, 3,000 Rand, 3,000 Rand, and 3,000 Rand. Now, what about the cash flow? Will my cash flow happen in the same month as where I incur my rent? So let's just think about the norm. Normally, you will have to pay your rent within the first 7 days of the month where you use the office. So my November rent will have to be paid before the 7th of November. So again, for rent expense, my budget and my cash flow will look 100% the same. So I'm just going to literally go and copy and paste that into that line up there. I'm just going to add some lines here. I think we might run out. Formulas, yeah, all my formulas are good. Right, so that was the rental deposit and the rent expense. Okay, now we get to salaries. Salaries are 14,000 Rand per month. A bonus check of 2,000 will be paid in Feb. And I just want to add one thing here and say that this guy falls in the 10% tax bracket. So let's look at that. So if I employ someone as an employee, what would their total cost to company be? Their gross salary or their net salary? And the answer is it's their net salary. It's obviously an expense because after you pay your employee, he's definitely not going to give the money back to you. So my expense that I incur will be 14,000 Rand from November until February. I'm ignoring the bonus check part at this point. Now, from a cash flow perspective, how are the cash, or how will the payments look? Will they receive? So obviously, when I pay my employee, it reflects on my bank statement. So the line will definitely have to be included in my cash flow forecast. But what will this be? Am I going to pay the employee the full 14,000 Rand? And the answer is no. I'm going to have to deduct 10% for PAYE. So he's only going to get 90% of his salary. And will that be in the same month as where we incur the expense? And the answer is yes. So I'll pay him that on the 25th of the month. So in December, you'll get the same, Jan the same, Feb the same. But now what about the PAYE that I just deducted off there? So I just deducted 1,400 Rand, 10% of 14,000 PAYE. So what's the rule with PAYE? That also needs to be paid over to SARS. So it will definitely have a negative cash outflow. So I'm going to put PAYE there. But now the question is, when do I pay that? Do I pay that in the month where I pay the employee? And the answer is no. I have to pay PAYE by the 7th of the next month. So the PAYE that I deducted there, I can show for cash flow purposes. It will only go out of my bank in December. December in Jan, and Jan in Feb. See, so the PAYE, this section here, must show exactly what is going to happen on your bank statement. But this, my total amount that I'm going to pay out because of this employee is 14,000, and I show that full expense in the month where the employee is due to receive his salary. Now let's look at the bonus check of 2,000 that will be paid in, let's just make that March, Feb 2020. So we know in Feb 2020 there's going to be a cash outflow of a bonus of 2,000 Rand. Question pretty much tell that to us. But now when are we going to reflect that bonus in our income statement? So what the rule with this is we have to accrue for that bonus, because that employee doesn't receive that bonus only because he works in February. He receives that bonus because he worked hard in November, he worked hard in December, he worked hard in January. So what we do is we call it a bonus accrual on the income statement or on our budget. And what we then say is we are going to every month, for the number of months that we have. So we're going to take 2,000 and divide it by 4, because there's 4 months in our budget. So every month we're going to show an expense of 500 Rand, 500 Rand, 500 Rand, which equals 2,000. But on a cash flow, on my physical bank statement, I'm only going to show the 2,000 Rand in February, because on my bank statement, the full 2,000 Rand will be paid out in February. Okay, now we get to probably the most difficult one. So this might be a bit hair-raising for you. But again, it's not in the assignment. This is for real life, so try and keep up on it. So in November 2019, you purchase a motor vehicle of 50,000 Rand on credit. We pay monthly interest of 1,000 Rand, or interest accrues to the bank for 1,000 Rand. We've got depreciation at 10% per annum, and our monthly repayment is 2,500. So remember, your monthly repayment includes a portion of capital and a portion of interest. So in this case, the interest we're saying is 1,000. So the capital amount that you are paying off every month is 1,500. Okay, but that's a whole mouthful. So let's break it up into individual transactions and assess each transaction on their own. So the first one says, in November, you purchase a motor vehicle of 50,000 Rand on credit. So let's first think, is that budget, cash flow, both, or none? So what's the two legs of that transaction? The first leg is we are going to debit motor vehicles, which is a asset with 50,000 Rand. So this is what your journal will look like. And then we are going to credit, call it West Bank, whoever you want. That is a liability of 50,000 Rand. So if we look at those two accounts, are any of those two accounts an equity account, either income or expense? We've got an asset and a liability. So the purchase of the vehicle definitely doesn't not go into my budget. And then let's see, the moment you walk into the dealership and you finance a car, you don't put any deposit down, you finance the full amount. Is there anything that goes out of your bank statement on that day, out of your bank account? And the answer is no. You walk out there with a car and you owe Westbank the money, but it does not touch your bank at all. So the portion of that question that says, in November 2019, you purchase a motor vehicle of 50,000 Rand on credit, that portion on its own is none. It doesn't go into your budget or into your cash flow. Now let's start. The interest that is incurred on the liability, the interest that you pay to Westbank, will that go into your budget? So let's ask ourselves, do you lose value because of the interest that you pay? And the answer is definitely yes. Because of interest, you are paying more for the vehicle than what it is actually worth, because it's only worth 50,000, but at the end of this, you're probably going to pay 70,000 due to the interest. So because of the interest, you are losing value. So interest should definitely be included in my budget at 1,000 Rand every month. Now let's see, should the interest be included in my cash flow? Now, to a certain extent, if you're thinking yes, then you would be correct, because interest will go off my bank account. But remember, the amount that goes off your bank when you finance a car is your interest plus the capital. It's the full installment of the motor vehicle. So as we know, at a later stage in this question, they are giving me the full installment amount. I'm not going to put the interest as an individual item in the cash flow. So interest is in the budget because I lose value because of it, but I don't specifically pay only the interest portion on my bank statement. So I'm not going to include interest on my cash flow forecast. Then we've got depreciation of 10% per annum. So what is depreciation? Depreciation is the way that we as accountants show how long-term assets loses its value. So I'm sure you'll all agree with me, if you were to buy a motor vehicle of 50,000 Rand today, in 1 year from now, that vehicle is not going to be worth 50,000 Rand. It's maybe going to be worth 40. And a year from that, even less and even less and even less. So what the question is telling us is this motor vehicle is losing 10% of its value per annum. So now let's decide, should that go into my budget? Am I, as the shareholder, losing value because of this vehicle losing value? And the answer is yes, I definitely am, because the moment the vehicle loses value, I can't sell it for the same amount anymore. So depreciation must be reflected in your budget. So the calculation for that is going to be 50,000 Rand, because that's the capital amount, times 10%. So that gives us our depreciation annually. So now we have to say, because remember it's 10% per annum. So if we want anything per annum to be divided into months, we've got to take that and divide that by 12. So my depreciation, I will lose value because of buying that car to the value of 417 Rand every month. Now, does depreciation reflect on my cash flow? Think about it. If your vehicle loses value every month, do you go to the bank and pay them funds for that value and tell them how the value or the vehicle loses value? You don't. It loses value and you lose value, but it's not a cash transaction. That loss of value doesn't go through your bank account. So on a cash flow level, we're not going to account for depreciation. And then lastly, it says the repayment of 2,500 Rand per month. So let's think about that. Of that 2,500 Rand, I said 1,000 Rand is interest and 1,500 Rand is capital. So should that repayment be reflected in my budget? And the answer is no, because the capital, I've already included the interest there, but the capital portion, I don't lose value because that full amount, yes, it goes out of my bank, but my liability towards Westbank decreases by the same amount. So I don't actually lose value. The funds go out of my bank, but so do my liability decrease by exactly the same amount. So the monthly repayment will not be included in my budget. But on my cash flow forecast, my full repayment amount will go off my bank statement every month. So on my cash flow forecast, I'm going to put 2,500 Rand in November, December, Jan, and Feb. Okay, so that's a bit of a higher grade one. You might have to rewind this and listen to that 2 or 3 times before you catch on to that 100%. But that's basically how we in practice account for the purchase of a motor vehicle on a finance lease. Okay, so only 2 more to go. So the second last one says you loan to the company 30,000 Rand in December and purchase 20,000 Rand computers in cash in the same month. And I said, don't worry about depreciation. I've already explained that to you. So let's first start. So again, there's 2 transactions in there. So let's start and first look at the loan to the company. So some of you might now be thinking, yes, in my budget, I need to include that. So in my budget, if I were to enter their shareholder loan, 30,000 Rand, let's just think about that. When will you have to pay the money back as the company? And the answer is yes. This is only a loan. So I can't reflect this as income because I can't keep the money. Fees we show as income because I can keep the money after the clients have paid it in. But in this case, the shareholder's loan can definitely not be shown as income. But will that reflect on my bank statement if I pay that money into the business account as a loan? The answer is yes. So shareholder loan will definitely be included in my cash flow, 30,000 Rand, and that's only in December. And then I say we purchase computers in cash in the same month. So we show that as a expense. If I walk into the shop and I walk out of there and I've now got 20,000 less in my bank account, but I have a PC which is worth 20,000. Have I lost value? The answer is no, I haven't. So I can't put computer equipment in my income statement as 20,000 Rand because I'm going to receive long-term value from this computer. So the computer that I purchase will go in the cash flow. Computer in the same month as where the loan comes in. So 20,000 will go out there. If I've got IT guys that does my monthly computer maintenance, that's a different story. That will be reflected as an expense and as a negative cash flow in the same month. Because after I pay them, I have nothing that I can sell and they will not give the money back to me. But if I go and purchase the computer, if I walk out the store, I can still resell the computer for a value. And that's why computer equipment goes into the cash flow, but the other leg is an asset, and assets don't go into the budget. Then we get to the last one. Audit fees for the 4 months will be 6,000 Rand payable in the 4th month. So let's first do the easy one. Audit fees. The moment I pay that, it will definitely go out of my bank account and decrease my bank balance by 6,000 Rand. But now again, your audit fees work very much the same as your bonus accrual. I don't pay audit fees in Feb because I traded only for Feb. I have audit fees because the auditor has to check my first 4 months of trading. So that means every month that I trade, I have to raise a provision for audit fees of 1/4 of the full amount that's going to be payable. So 6,000 there. So if I add all of those together, I've got 6,000 Rand, but I'm going to pay that 6,000 Rand in Feb. And it goes into my budget because after I've paid the auditors, they are not going to pay my money back to me. I don't have anything that I can resell. So therefore, audit fees will be shown as an expense. So now there's just a quick little quick thing that I want to bring to your attention. So let's just have a look. Let's just assume this was your normal budget that you now did for yourself. So let's say you were earning 10,000 Rand at the firm, or you were earning whatever, 15,000 Rand at the firm where you were, and now you do only this budget portion. Now, if you check this, then you're going to think, okay, it's not that difficult to find fees of 20,000 because my billing rate is 2,000 Rand an hour. In other words, I have to work for 10 full hours in this month to be able to make those funds. That I will very easily be able to do. Now, in this budget, I've accounted for myself a salary of 14,000 Rand. And if I take the same salary that I'm earning at my job currently, then will I be able to cover it? The answer is yes, I will. If I check my accumulated profit for the 4 months, it means I will be able to pay my own salary of 14,000 Rand. And after that, I'll have 8,000 Rand left. So that's great. I can go and give my resignation letter to my boss. I don't need him anymore. But if you only did this budget and made that decision solely on the budget, then you would be in quite a big amount of trouble at the moment if you didn't do this cash flow step. Because if we check the cash flow, this actually looks a whole lot worse. Our bank account goes into overdraft of nearly 21,000 Rand. So this means before I start this exercise, I need to be able to give or have an overdraft of 22,000 Rand. Plus also, I have put 30,000 Rand into the company. So that means to start this business, I first need to find 50,000 Rand before I can start trading and earn my 14,000 Rand a month salary. Now, you'll probably not get finance in your first month of that you start a business. So we don't have an option to have this closing balance going into negative. So the highest negative that we've got is the 23,000 over there. So if I don't have an overdraft facility, then it means in month 1 year, I'm going to have to deposit about 25,000 Rand in as a loan. Now, if I check my closing balance, yes, my closing balance is now positive in all the months, but means I have to at least have 55,000 Rand in cash before I can start this practice of mine. So for that reason, so basically when you do your cash flow and your budget, if it doesn't match up, if you don't have an overdraft, then you've got to increase your shareholder loan amounts up to the point where you can go, where that doesn't go below zero. And if your budget runs into a negative year, then there's no use in even starting the business, because then it means you're just going to make losses as you go along. So you have to definitely first get this budget to end up on a positive amount there. Now that can be done by either increasing your fees. So you either need to find more clients or clever ways of getting new clients so that you can increase your fees, or you need to cut on some of these expenses. So you have to go and say, look, I can't afford the rent now. We've got to delete that out. Okay, great. Now my profits look a whole lot better than what it did. So this is the way that you've got to go and sit and you literally play with this budget and cash flow until you get this to match the funds and the profits that you want and have. And then once you've done that, the moment November is now passed, then you must go and do your actual accounts for November and your actual cash flow for November and match that up to your projections to see whether you are over and under. And then if you're over, you can adjust your December, Jan, and Feb fees, or your budget and cash flow for December, Jan, and Feb. If you were under, then you're going to have to decrease that to be in line with where you're supposed to be. Or then you know, if you didn't make your budget in November, you've got to work a whole lot harder in December to try and catch up what you were, or catch up for the losses that you made over and above your budget, because you can't go below these figures. Then you are going to run into a loss. Okay, so that's all that I wanted to show you guys on how to do a budget and cash flow. That then basically concludes everything that we need to do from a lecturing point of view. So as far as I know, there's going to be one more lecture that you guys can listen to. In that lecture, I'm going to go through the assignment in a whole lot of detail and give you guys a whole lot of pointers on what to focus on the assignment. I'm going to show you 1 or 2 places where they're trying to catch you out. So that's quite an important one to attend or to listen to make sure that you do the assignment in the correct way and hopefully pass.